Let's talk Canadian real estate and whether I think we're going to see a correction or, dare I say, a crash in the Canadian real estate market. We're going to analyze an actual real estate deal an hour outside of Toronto and whether it is actually worth buying or not from a rental standpoint. We're going to take a look at some Canadian real estate investment trusts and talk about what the actual government is doing inside of those Parliament walls, because trust me, this is a conversation outside of your own personal bedroom as well. The government is largely debating on what they have to do to fix the current supply and demand problem. But if this is a conversation you can personally appreciate, all I ask in return is you hit that like button, because we got a lot of data to go over. Now, what we're going to do, guys, is we're going to analyze a real estate deal somewhere outside of the city. These are all homes selling within an hour of the surrounding Toronto area. But before we do, let's talk about the general prices we are currently seeing on this heat map, because everybody knows that Canada right now has global eyeballs on it as being in the top 3 fastest growing cities, whether we're talking Toronto or Vancouver globally. Right now, Toronto real estate on average is selling for over 1.2 million. The surrounding areas can sell for anywhere from 600,000 to $1 million. Vancouver, 1.2 million. And damn, the only place you can live comfortably and have a reasonable, adequate lifestyle is if you're going to go to Manitoba, Saskatchewan, out west, out east, guys, where homes are still selling for $300,000 to $400,000. But God knows nobody wants to live in one of those barren, wooded wastelands where winter is just unbelievably brutal, right? So let's talk about some of these homes here, because I'm trying to find like a reasonably priced house that somebody may want to live in, but I want to look at it from a rental standpoint, because this is going to explain why I think there's a big problem in the housing market. And we're going to use this deal right here in Beaverton, Ontario. Now, this is exactly about an hour 20 outside of the downtown core of Toronto in Cottage Country, right near Lake Simcoe, selling for $679,000. Now, this is a very small property. It's 1,200 square feet. And right now, if we were to put a 20% down payment, $135,000, we'd be looking at an average monthly payment of $2,574. My guess is that does not include property tax, doesn't include maintenance, obviously utility costs, renter's insurance, housing insurance, all that jazz. So we can probably round that up to being closer to about $3,000 a month is my guess. But let's just talk about, the average rent that you might be able to get. Now, this is largely debated, but let's just kind of go through a few of the rental prices within an hour's drive of Toronto. These are all different areas, like St. Catharines. Here's one for $2,195 a month in St. Catharines. It's 1,400 square feet, 1,500 square feet here. I mean, for $3,750 a month. Let's look for the homes though. Here's a 2-bedroom home for $2,450 a month, and that's 800 square feet. This is in Toronto though, so it's obviously that the price is much higher, a lot less square footage. Is there anything more localized though? Let's take a look here. So here's one in London, Ontario for $2,995 a month, 5-bedroom, 2-bathroom, 2,000 square feet, so 500 square feet more than the one we're looking at. Here's Mississauga, a 4-bedroom home. This one's 2,200 square feet for $3,200 a month. I mean, these homes are all over the place, right? But we can see that the average price when we're looking around 2,000 square feet is about $2,500 to $3,000 a month. And these are way closer to Toronto than where I'm currently at, looking at this kind of cottage country properties. So right now, the scariest thing, guys, is there's no way that you're going to be able to get a renter or a tenant inside that property that is going to currently cover this mortgage. I don't know any property, and if you can find one within an hour of Toronto where you can make a 3 to 6% cap, that's your general return after the mortgage, the interest, the property taxes. That's what most real estate investors look for, is investment real estate that cash flows after all the expenses, so they can pay down the mortgage and make a cap gain return as well. But what does this generally mean? This means most people buying real estate right now are buying them for capital gains. This is what leads into a speculative market, because even condos near Toronto right now that are selling for $800,000 are only renting for about $2,500 a month, usually in the median area. So you can't even buy a condo and profitably rent it. So you're really relying that this market continues to go up. Now, let's talk about the rental control, because a lot of people are speculating that, well, if housing goes up, obviously rental prices have to go up to make up for that disconnect between actually covering the cost of the home. Well, that's not how it works, guys. Basically, Ontario is landlocked how much landlords can increase rents. And basically in 2020, the limit was 2.2%. So basically the way this works is the market generally decides how much somebody's willing to pay for rent. Once you have that rental property leased out for whatever the demand is going to be for it, you can only increase on that tenant whatever the government says year over year. And in 2022, you could only increase the rent by 1.2%. In 2021, they didn't allow you to increase the rent at all. And in 2020, they allowed you to increase the rent 2.2%. You ain't going to get to a really large return only increasing a $2,000 a month payment by 1.2%. I'm sorry. So unfortunately, we're not going to see rents just drastically increase for whatever reason, even though housing is going up pretty dramatically. The other problem with Canadian real estate, and I've talked about this in the past, guys, is the green belt. What is the green belt? Well, basically we have protected wetlands surrounding Toronto. So you can no longer build out, you can only build up. This is one of the defining factors toward real estate just exploding in price, primarily just because, guys, if you own 65 acres, you have to own 65 acres to sever an acre lot to build another property. I know this because my parents own a 63-acre farm, and they are 2 acres below the limit to sever that farmland and turn it into a residential property. So what ends up happening here, guys, is you just take a look, all the surrounding areas of Toronto, they can no longer develop out. So developers are having a big issue, which is why we're seeing this onslaughted rise of condos. I know realtors that have made a fortune playing the greenbelt limits in Barrie, let's say. Barrie's another one of those cities that is built out as far as they can build out based on permitting, and now they're going to build condos. And as soon as condos start going up, housing prices go up drastically with them. I honestly think the government could loosen the greenbelt laws. It doesn't make any sense. I'll explain to you why. I don't think I'm a prude about the environment, but primarily Doug Ford tried to do this a couple years back, and guess what happened? He got ridiculed 9 ways to hell from obviously people that are more about green and protecting the wetlands. But the thing that bothers me, guys, Canada is huge. I mean, let's zoom out here. Canada is so massive that all of Ontario, Toronto specifically, because Toronto makes up the vast majority of the population of all of Canada, they live in this little dot, this tiny little dot at the very bottom of Ontario, and there is no development. There's nobody living in this entire vast land of woods. So why are we so hyper concerned about a super particular area of this country? Now, don't get me wrong, we should keep some of the wetlands, but I don't think it needs to be limited to the factors that currently exist. Now, before we talk about the solutions and whether I think the markets are potentially going to correct or crash, I want you to hear from Parliament what is going on within government, because it's a shit show. Just take a listen.
Member for Carleton.
What is the average increase in house prices since this government took office in 2015?
The Honourable Minister.
Mr. Speaker, Canada's economy contracted by 17% between February and April 2020, the largest and most sudden contraction in real GDP since the Great Depression, and we're already back.
The member for Carleton.
Just the average house price?
The Honourable Minister.
5.5 million Canadians lost their jobs, and they're all back.
Member for Carleton.
And what would they pay for the average house?
The
In
Minister.
2020, unemployment rated more than doubled from a pre-pandemic level of 5.7% to a record of 13.7%, 6% now.
Member for Carleton.
I think there's a problem with the audio in the chamber. The question was, what is the average cost of a house in Canada today?
The Honourable Minister.
Mr. Speaker, our government has made historic investments in housing affordability, and we will continue to do so.
The Honourable Member for Carleton.
And how affordable are such houses?
The Honourable Minister.
Mr. Speaker, our government has made historic investments in housing. We will continue to do so that housing is affordable for all Canadians.
Honourable Member for Carleton.
If so, how much have house prices increased since this government took office?
The Honourable Minister.
Mr. Speaker, let's talk about how it is possible for people to afford their houses with good employment. And that's why employment income fell by an unprecedented $28 billion during the pandemic.
How much?
Member Minister.
Mr. Speaker, the economy is recovering.
Member for Carleton.
Does the minister have any idea what it costs for the average person to buy a house in Canada? Does he have any idea, or does he even care?
Mr. Speaker,
The Minister.
City helped more than 213,000 businesses stay afloat.
Well, I think that the average Canadian can see how much this government knows and cares about the cost of buying a home in this country, which is...
And this is your government. They can't even agree internally whether there's an inflation problem. They think it's just the supply and demand problem. Another part of the parliament thinks there's a huge inflation crisis going on and we need to correct it as soon as humanly possible. But the government is stepping in to do some things to try and correct this. We're going to discuss in a second. But let's talk, are the real estate markets going to correct with interest rates raising? I think interest is going to go much, much higher than it is. Historically, for every 1% interest goes up, real estate corrects 10%. I don't think we're going to see the same kind of correction, but I think we are going to see some fearful markets. And I don't know if it's going to crash, but I am slightly concerned, and here's why. Let's say you went back 3 years ago in the same area I live. You could have bought an average house for $300,000 to $500,000. Let's use $500,000 at the upper range. If you bought that house with a 20% down payment, you would have a $400,000 mortgage. Let's say real estate corrected by 10, 20%. Whoop-de-doo, you're out $50,000 or $100,000 on your mortgage. You could recover from that in a couple of years just by working and paying down the mortgage. Now, let's say the average house is costing you $1 million. You're putting $200,000 down, that 20% down payment. But let's say now real estate corrects 20 or 30% on an $800,000 mortgage. You are now out hundreds of thousands of dollars, and you will not be able to sell yourself out of that mortgage without putting yourself in a major debt problem. That is what scares the shit out of me in the current market about buying a house, because I feel like some people might be overstretching themselves, and if interest goes up, they're only locked in for maybe 3 to 5 years on a fixed rate mortgage, so they might not be able to afford those rates going up. However, as much as I am scared about that, all these people driving housing up, primarily being investors, guys, they're not going to do much here, because if interest materially goes up, they're done flipping homes. They're going to sit on their hands because they don't want to trade $1 million mortgage for another one that's going to be a higher interest rate. And what that does is it even adds to the supply problem, because now there's still less supply and even less supply on the market because nobody wants to shift their mortgages around. So I don't know how that intertwines or how we're going to see that pan out, but I do know that the growth rate we're currently seeing in this real estate market will be unsustainable. It cannot continue this way, and the larger and faster it goes up, the more likely and the harder it's probably going to fall. So let's talk about the solutions, how you can invest in this market, how you can make money. I think anybody that can afford a house reasonably should buy one. Don't get me wrong. Even if we're in a bubble and you can afford one of these properties, by all means. That's not me. And I have $300,000 and I don't feel like I can afford a house. But let's talk about where I think the real value plays are going to come in. And that is with real estate investment trust. These real estate investment trusts, Canadian REITs, are partnering with the government to fix the demand and supply problem. Look at Dream Unlimited Corp. We're going to talk about a few of these. This thing has been flying up with government partnerships and trying to expand residential areas. And most of these REITs, dare I say, have not recovered from their current crash in March of 2020. This makes me think that we're seeing a bit of a value setup for the future potential of what these companies are going to do. Now, RioCan is one of my favorites. Many of you know that. The Rio Clan. Hit that like button for the Rio Clan out there. But these companies are primarily fixed on, obviously, everything from mall REITs to RioCan specifically is largely a mall-based REIT and an office REIT, getting into residential. You can get it into all kinds of different REITs, office REITs, things like that. But I really like RioCan and Smart Centers, and here is why. Because let's use Smart Centers as an example. They have 52 projects underway, 3 million square feet under construction. This is just one company. Forget the other two we just looked at. And if we take a look at how they're developing properties, and again, a lot of this is partnering with the government, they're literally building cities around outdoor malls. Because many of you driving around the city, you might see kind of these outdoor shopping centers with Walmarts in them and dollar stores. A lot of them are owned by companies like Smart Centers, and the government says, hey, well, you own the whole surrounding real estate, so why not just build a city around your mall? And that is exactly what they're doing. I mean, take a look at some of these projects. They are astronomical. And the best part about these REITs, guys, is you can buy them with all this future potential upside while also getting an actual dividend yield that is the equivalent of what you would get from generally getting a rental unit. Because again, 3 to 6% after all the expenses, mortgages, taxes are what you aim to get as an investor in rental real estate. That doesn't exist anymore. So I don't want to chase cap gains. And I know these companies are trading for much better values. Most of them are trading for under their underlying asset value. Because I mean, 4.7 billion, I'm not going to do the math in this video, but typically these REITs are still trading below what their underlying assets are worth. So not only are you getting a really cheap deal here, and they're still trading down from their highs, you're getting a dividend yield that you're never going to get off a residential unit right now. So what do I got to think about all of this, guys? Well, if you want to own the best real estate Toronto has to offer, you got to do it through REITs, because even Dream Industrial here, guys, are this Dream REIT that's been absolutely crushing it. Dream Unlimited Corp. They own everything from the Distillery District to some premier properties. Same thing with RioCan, owns most of the most premier properties in Toronto. So you kind of get exposure to that real estate without having to upfront the millions of dollars, and you can invest literally $20 or $30 at a time. Yes, you do not get the same benefits from leveraging the bank's money. Yes, you do not get the same benefits of having to leverage your mortgage. So if you know your real estate capital gains value go up, you can't pull equity against it to go buy another house. Yes, you do not get any of those benefits. But what I do get is the ability to sleep easy at night, knowing if even the real estate market corrects, these companies are going to have really stable tenants. They're not going anywhere, and they need to fix the demand problem. So for as long as there's a demand problem, these companies are going to continue leasing and building major, huge development properties that as the value goes up, they continue to take advantage of, and so do I. So I pass the question off to you. Do you guys think the Canadian real estate market is going to correct or crash? Nobody really knows, but I promise you the growth rate's unsustainable. So let's kind of sit back, hit that subscribe button, because as this story unfolds, I'm going to continue to update you here. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.